Welcome, ladies and gentlemen, to Commodity TV and a new online edition of our online interviews. Yeah, we want to talk today for an update with Uranium Energy Corporation. And Amir Adnani, the CEO, is here with us. Amir, good morning to Vancouver. How are you?
Hey, Jochen. Good afternoon to you. I'm doing great. Nice to reconnect. It's been a while.
Absolutely. It has been a while and a lot has happened, to be honest. I mean, we see all the discussions with energy, with oil, with power generation. Uranium is already in the favor of everybody. I would say even everybody, starting even the European Union in the taxonomy, quantified its CO2 friendly and free for the power generation. So that must be or would have been a big day for you, I guess.
This is all 18 years in the making, Jochen. We've had the vision about energy security in the U.S. since the beginning of forming Uranium Energy. I thought 18 years ago, it was crazy that the U.S. market was importing 90% of its uranium requirements. Today, it's almost 100% of uranium requirements. But of course, we didn't predict Russia's invasion of Ukraine. We didn't predict these mega trends of decarbonization and electrification taking place, all support a favorable outcome and more demand for nuclear power and uranium. But look, in my 18 years of building Uranium Energy Corp, being in this sector, I've never seen the fundamentals so positively aligned as right now and moving forward, especially if you believe and want to see much higher uranium prices, especially in this environment right now where it is not easy globally to navigate geopolitical issues on top of making sure projects are being built with sound ESG fundamentals and to do all of that on time and on budget. Unless you have a first mover advantage, unless you have projects that are already built, very much the situation we're in with UEC. This is going to be a difficult environment unless you're in that position, difficult environment to build mines fast, which means one thing, uranium prices are going a lot higher than this.
Yeah, definitely. Well, any guess where uranium could move? I mean, we know it from the past. 140 was the last all-time high, I would call it.
I think it's very simple. In the current price environment, we are not seeing companies announce that they're building new uranium mines. New mines are not being commissioned. You're seeing, or anything of any significance. That's the other thing. We have a market in uranium where demand is approaching 200 million pounds per year of just reactor demand. And not talking about SMR, small modular reactors, which are really a fast growing part of nuclear energy. And supply of uranium from mining is 130 million pounds. We have a 70 million pound structural deficit. So let's say just to eat into 20% of that, that'd be 14 million pounds per year. Have you seen an announcement of any company announcing they're going to build a new uranium mine that's going to do 14 million pounds a year of production? Right? And that doesn't exist. And even if that did exist, that'd be 20% of the structural deficit. And so this is the foundational concept we have to understand. Then we go from there and say, well, surely this can be fixed with price. Price fixes everything. And the answer is yes, it is true. It can be fixed with price. And the last time we had a price that was incentivizing new mines to be commissioned was pre-Fukushima in 2010. It was $72 per pound. Adjusted for inflation, today's dollars, that would be almost $100 per pound. And we're at $47 per pound in the market. And of course, even when the uranium price in the last year got to $62 per pound, your home, you experience inflation, you experience supply chain bottlenecks. Now imagine building a brand new mine in a remote part of the world. Now add on top of that complications around Russia weaponizing its energy resources to drive this foreign policy agenda to finance its war on Ukraine. This is unacceptable. And if you're a Western customer or consumer of electricity, you should not be financing Putin's war in Ukraine or any potential future acts of aggression. Because when we rely so much on Russian energy, we're basically financing this war machine. And we've seen what can happen in Europe. Europe is basically a hostage right now to Russia when it comes to gas. It's unacceptable. There was news about that this morning, even, where they're going to reduce the amount of gas coming to Germany. Johan, you're very lucky you're not in Germany right now, but this could still have impact. And the bottom line is the world should not be so dependent on uranium and nuclear fuel coming out of Russia, Kazakhstan, and Uzbekistan. And Kazakhstan and Uzbekistan being very much in the middle of this, because they produce a lot of uranium. That uranium has to go to Russia before it can leave for the international market. There's complications with transportation, with shipping lines that don't want to go to Russia to bring material out anymore, or insurance companies that don't want to insurance that cargo. So what a complicated world. And we've never had a market like this where you had a fundamental structural deficit, and then you had war and transportation and logistic complications layered on top of that. And not to mention that all of us want to see projects be developed with positive ESG attributes. Well, it's not a positive ESG attribute to say you're buying uranium or developing uranium in a war-torn country, or countries where there's huge social unrest and where projects are not just being developed to the highest standards. So North American projects are so ideally positioned. And that's why, as you know, we put our money where our mouth is. We've invested heavily in North America and the US in particular with our acquisition of Uranium One.
Exactly. That's just the next topic I wanted to touch, because my feeling is what we have discussed in the last 3-4 minutes was exactly laying the ground also to buy Uranium One probably, because you must be, well, let me allow to say that, but I could imagine UEC is the darling of the Biden administration, because you are one of the companies who really can go fast in production to provide US uranium for US utilities.
Our acquisition of Uranium One from the Russian government was a very important development, positive development for national security and energy security in the US. So I think hopefully there's bipartisan recognition, not just the Biden White House, certainly the Biden White House, but a bipartisan recognition that, hey, we don't like the fact that the Russian government owns the best and biggest uranium deposits in the US on US soil. This went on for way too long, over 12 years. It was always uncomfortable that this had been allowed to happen in the first place. And look, the bottom line is we did something about it. UEC, as a US company, a Texas-based company with a vast track record of building and mining and operating uranium mines in the US, we stepped up. And we did it not for so many reasons, right? We did it because we recognized these were the best assets in the US. These were large deposits in Wyoming with a large built processing plant, a first mine that was already built, past production that confirms these are proven projects with a proven history and track record. And Johan, the best part about these assets are one of the key components is a processing plant, one of the largest processing plants in the United States called Irigaray. Can you imagine if you had to go build a brand new processing plant in today's inflationary environment, in today's environment where you can't get...
What's that? That's 500 million easy, right?
It would just be crazy. It wouldn't just even be the money. It would just be the timeline it would take to permit and build something like that. So I think there was incredible strategic value in acquiring Uranium One. It certainly has established goodwill capital for us in Washington and amongst U.S. utilities, which are still the biggest customers for uranium in the world. There's over 90 reactors operating in the U.S. U.S. consumes 50 million pounds of uranium annually, and there still is no production of uranium in the U.S. So this is a huge market opportunity. Lastly, why is Washington and the U.S. government important? They're the newest customer for uranium in the market. Just recently, they've come out with an RFP, a request for proposals, to buy 1 million pounds of uranium for the U.S. government account. And you have to be a U.S. company with U.S. assets, U.S. production capability to even qualify to bid for that. So again, I love this because this is historic stuff, Johan. In the past, in the last 30, 40 years, we never had a situation where not only was there a structural deficit between supply demand for uranium from just reactors. But now there's even new demand emerging from the likes of sovereign nations like a US government that says we're going to build a national reserve of uranium and conversion and enrichment. The Biden White House is asking Congress to approve $4 billion to be handed over to the Department of Energy for the purchase of newly mined uranium and conversion and enrichment, basically to stand up an industry that doesn't exist to fuel the 90 reactors in the US, which are providing emission-free electricity. They're the backbone of the electricity grid and their emission-free electricity, which is, of course, the target that the US government has to be net zero by 2035. You can't do that without nuclear power.
Yep. No, that's absolutely impossible. I see it the same way. And I mean, on the one hand, we have the, let's say, political basis already. Supply demand is fine. You are US based. Let's have a look onto the company. I mean, with Uranium One, you said it already, Irigaray is a processing plant, but you have the Hobson hub and spoke strategy also. And if I'm correct, you can hypothetically produce then 6.5 million pounds uranium when you decide to go back into the production for the markets. I think that is outstanding. But you also bought already something like, what is it, 5 million pounds physical. So it looks to me like you have a strategy in place that you can say, hey, you know what, if the price goes higher, we can, let's say, do some contracts, we are able to deliver. And during that time, we are building our production. Is that something that might happen?
First of all, let me just kind of make a high-level comment, because I think it's really important to talk about our business strategy in the context of also share price performance. And we laid out this strategy about a year ago where we said, look, the uranium price is below global cost of production. We think it's a good time to actually just buy physical uranium and contract for physical uranium deliveries at a low price over many years. That was our physical inventory program. You mentioned it. It's grown to be 5 million pounds in size, and it's made up of uranium acquisitions that we've already made and sits on our balance sheet. Roughly almost 2 million pounds of uranium that sits on our balance sheet. So if the uranium price gets to $100 tomorrow, we can make immediate sales from uranium already on hand. But again, in the event of those higher uranium prices that we're building for and anticipating, we have the reliability and certainty that we can get into our physical program and start generating revenue before we even start production. Now, the production itself is comprised of assets that are fully permitted for production. Many projects that are in the world today at development stage are not fully permitted yet. So we have not one, not two, we have 8 fully permitted uranium deposits, 2 fully permitted plants at Hobson and Irigaray in Texas and Wyoming. All of that makes up a production profile of 6.5 million pounds per year based on both licensed and installed capacity that we have. That's unparalleled, and it's diversified. In the sector, that's unparalleled. No one else has that. And the fact that it's diversified really means we don't have all of our eggs in one basket. We're a highly diversified company, which is so key. We can sell uranium from our physical inventory program, or from a Wyoming production platform with its own processing plant, or a Texas production platform with its own processing plant. The size of the underlying resources in Wyoming, which includes the Uranium One resources that we acquired, makes up the largest resource space of in-situ recovery projects in the United States today, especially in a state that allows uranium mining, which Wyoming does. So size matters as well. We have sizable resources. And finally, this is all, Johan, in my opinion, being reflected in our share price in a positive way. What do I mean by that? When we acquired Uranium One, we highlighted the fact that it doubled the size of our production capacity and our underlying resources that were fully permitted for production. It doubled, but the cost was 12% dilution. So anytime you can find good deals like that, where you say, hey, I can double the size of my business, but the dilution cost is only 10 or 12%, that means you've increased value on a per share basis. And that's why you see year to date or year over year, UEC has been one of the better performing uranium stocks amongst all companies in the sector, because we're the only one that have actually done M&A. We've gotten out there and we've said, look, we're going to put our money where our mouth is. We believe in $100 a pound uranium. We're going to build a company that can really accelerate in that environment. And unlike a company like Cameco that is contracting now at today's uranium price, they're putting in floors and ceilings and locking in the price. We're saying, you know what? We want to be an alternative to that. We don't want floors and ceilings. We don't want to limit that upside to get to $100 a pound. We want to be 100% unhedged. We want to be 100% unhedged. So if uranium goes to $100 a pound, $150, we're not leaving anything on the table. We're capturing all of that upside. And that in itself is also unique, something for people to pay attention to. It's often forgotten. What does it mean to be 100% unhedged? That's what it means to be 100% unhedged. UEC is unhedged. And again, the assets, when you drill down and you look at them, whether the Anderson resource that we put out recently, one of the largest deposits.
Yeah, that was 32 million pounds indicated. I mean, that's a lot, right?
Look, it's one of the single largest uranium deposits in the United States. And we're saying, no, we want to talk about things that are permitted, because that gives us much more immediate exposure to production. And we have a great pipeline of assets for future development and growth, comprised of things like Anderson at 32 million pounds, which is one of the largest deposits in the US. But that's what makes the UEC portfolio so attractive. So when you look at the portfolio, you have a foundation of production-ready projects in Texas and Wyoming, using in-situ recovery, being fully permitted. But then you have a lot of room for growth, a lot of development potential in projects like Anderson and in exploration. We have over 100,000 acres of land that's unexplored in Wyoming, 50,000 acres of land in Texas that's unexplored. That if we find uranium there, we can just plug it into our production platform and develop it very fast. So a lot of room to drive additional value, but at the same time, we're being super conservative by talking about what is permitted and ready to go right now.
Absolutely. And I mean, you are also safe with your cash position. I think you are at something like, if I'm correct, $180 million cash, right? And no debt.
Yeah. So all figures are in US dollars. I believe June 7th, there was a press release where we provided an update on our cash and liquid asset position. And this is a debt-free company. This is a company that does not have hundreds of millions of unfunded capex in front of it, because our projects are—
it's all there.
It's there. And it's in-situ recovery, which is an alternative to conventional mining, where you're drilling water wells to do solution mining as opposed to conventional mining. So to have over $180 million of cash and liquid assets, including physical uranium, which will go up in value with the uranium price going up in value. So you already have that direct exposure to the uranium price at the balance sheet level, with the almost 2 million pounds of physical uranium on there. But to have no debt and to be positioned in the US, where you can sell to US utilities, Western utilities, you qualify for sales to the US government. We have more ways to sell uranium than the majority of companies out there, because we have all these various customers that we can potentially sell to, and the spot market that's becoming a lot more liquid and active. And look, a very strong balance sheet is key, because it'll open up doors to opportunities that you can step in and take advantage of potential distress, potential dislocation in the market. So we've demonstrated that we're prepared to be aggressive and we're prepared to be opportunistic. If we see a great deal, we're going to make a move for it. And that's how our company is really being positioned, Jochen, to be a sector leader, but a sector leader with truly a North American profile, right? So we don't have Kazakh risk. We don't have African. We don't have risk in today's world where geopolitical risk is elevated. Utility customers don't want to be as exposed to moving forward to Russian supplies or Kazakh supplies. They're trying to diversify away. We offer a heck of an alternative as far as a counterparty goes and a supplier goes, right? Where we say, look, we're first and foremost in the US. Part of our growth strategy will include and may include a North American footprint, but to be entirely focused on the US or North America is a profile that doesn't exist out there right now.
Yeah, absolutely. I mean, those are all the reasons why I am also a shareholder of your company, because I see it the same way. Last question, Amir, because we are already at 24 minutes.
Okay.
I always love to talk to you and listen to you because it's so exciting. But the thing is, to me, what needs the uranium price to really move finally? Because I have the feeling the dinner buffet is laid out, but nobody goes to the buffet and grabs the food. That this is what it looks to me like, because we have everything, supply demand disrupted. We have the war. We have Kazakhstan, Uzbekistan, Russia, all deep problems, large problems. It's all a nightmare. Yeah, we have growing reactor demand. We are building reactors. I mean, the Chinese are doing what, 150 reactors until 2040. I mean, that's a no-brainer. Yeah, even the Germans want to run their reactors no longer, and that's really a big sign. Yeah, I mean, not for the demand side, but just for the sign itself. And also, I heard that the Japanese want to restart 9 nuclear power plants by end of the year because they cannot pay their power bill any longer. So what does it need that uranium moves from the 47 to the 70, 80s? And at 70, 80, would we see finally you guys in production?
Well, Johan, absolutely. And look, my vision and what we're building here is we're building a company that is not only going to be effective and competitive at being able to operate in a, let's call it $60 uranium price environment, in terms of a minimum level to clear to restart production at our existing facilities that are ready to go. But to be able to truly excel and be there as we get to 70, 80, 90, $100 uranium. And when we get to north of $60 a pound, I don't want to be making acquisitions anymore. So while the fundamentals are incredibly positive for all the reasons you talked about and we've talked about in this interview, I'm okay if there's a bit of delay before the price goes higher, because it's given us a chance to really consolidate and do some really solid deals. I mean, can you imagine how much it would have cost us to buy Uranium One from the Russian government if the uranium price was $100 a pound when they came to sell that?
Absolutely, no brainer.
Exactly, right? So this is the perspective you need to have, is if you really believe in something and if you really are trying to make a big investment in something that has all the positive attributes going for it, you want as much time as possible to get your house in order, to build your position before that goes. That's my attitude. The price will take off when it does. No one's ever been able to pick the timing right, but the fundamentals are the best they've been in 18 years, 20 years. Guys that have been doing this for longer than 18, 20 years will tell you the fundamentals right now are the best they've ever been in nuclear power and in uranium demand. And so this is just a really awesome setup. And look, demand for uranium and the story that we're talking about here is recession proof. That's the biggest thing. Demand for uranium will not change, will not be impacted if we have a deep recession, a shallow recession, no recession. Doesn't matter. This is a defensive sector because nuclear power plants are baseload power. They're backbone of the electricity grid. Unless demand for electricity goes to zero, which is not the case, reactors will keep running at the same rate they're running at now and have been, which means demand for uranium is unchanged. So this is not a GDP commodity like a copper or other commodities that are more impacted by a softer economic growth profile or expectations of a recession or whatnot. This is a commodity that actually is very defensive, in that ourselves as a company and at Hobson in South Texas, you got to be able to demonstrate that you've de-risked your assets and that you can produce reliably. And that's what UEC demonstrates. UEC demonstrates that it's a company that not only has it been aggressive growing, it can produce uranium. It has assets with a proven production track record. It has the permits. That's what sets the company apart. That's our differentiating profile. And yes, I think it's not a if, it's a when. As far as when we see $100 uranium and higher. So between now and then, I'm doing my part to make UEC as strong as possible, take advantage of this environment, so we don't look back and say, geez, we should have bought more uranium, we should have bought more assets when uranium is over $100 per pound. And that's the mentality.
Absolutely. Super. Amir, thank you very much for the update. I see it absolutely the same way. And I would say it's time to collect the UEC shares, because it never has been a better market these days. I'm doing that definitely. I'm buying more. And yeah, let's wait for it, because time will tell. But I think it's a very short time frame when we will see much, much higher prices. And yeah, also we'll see you guys then into production.
Look forward to it, Jochen. Thanks for taking the
Me too. Thank you very much, Amir. Yeah, ladies and gentlemen, that was Amir Adnani, the CEO and founder of Uranium Energy Corporation. Yeah, the largest uranium company in the US, and it will be also probably one of the largest, or the largest producer then in the future. And yeah, with over 100 million pounds in resource, $182 million in the bank, and 5 million pounds physical. I mean, that is a no-brainer to me to own the share, to be honest. Yeah, I am a shareholder, and I will definitely do some more here. And I think this is, when you want to play the uranium market, one of the best opportunities really you have, especially at those prices still, because with the energy, yeah, how can I say, energy crisis we see in the light of the Russian-Ukraine situation, not only in Europe, but also worldwide, uranium price has to go up, will go up. The demand is there, the supply is not there. And so for that case, thanks for watching us. Have a look at UEC. All the best from Austria today. Thanks and bye-bye.